Hello and welcome to this very special episode of Crystal Ball, a show that we do periodically at turning points in the market to just get a handle on whether some bigger trends are emerging. The trends in the Indian market have been very ominous, to say the least, while a handful of large cap names have kept the Nifty afloat within 10% of an all-time high. Underneath, there has been such decimation that a very large number of mid caps and even large cap names are now trading at below 2008 lows. Are there the first sniffings of a bear market situation out here? My guest today on the show, ssharma of First Global. Shankar, thanks for joining in. Does it look like something more ominous than just a routine correction? Could we even be at the early stages of a very bearish kind of patch for the market?
Yeah, I mean, I think the last time we met on your show, which was I think around budget time, I had held the view that we are at the cusp of a major bear market, and events subsequently have not made me revisit my view at all. In fact, from the beginning of the year, from early January itself, we have cautioned all our clients repeatedly that this year is going to be very different from last year. Last year we were table thumping bulls right from the month of January 2012, but in January this year we reversed our view completely. It's the complete U-turn. And so far the script is playing out, probably even a little worse than what we might have expected. But when you have the beginnings of a large bear market, then go back to 2008 January. You remember how it started. It started out being really ugly, and then the whole refrain started to come out that the worst is over. It's a healthy correction, and rubbish like that. It never quite happens that way. When you have significant cuts of the kind that we witnessed now or in Jan 2008, you should almost as a rule of thumb take it as something portending an even more ominous next few months.
Your views in January were sounding very cautious but not outright bearish. What you're saying right now is that maybe the trend is accentuated on the way down and certain facts have come to the fore which make you even more convinced that we are entering a bear market. What are these facts or signals that you're picking up?
Well, for one, we look very closely. I mean, at our hearts, we are really tape watchers. And, and when you watch the tape of how India or the emerging market pact has been behaving versus the US, that was telling you adequately that there is something wrong in this whole emerging market growth story theme. And, just go back to 2007. It's almost a mirror opposite of what happened in 2007. The US markets peaked in the month of September end, or actually October 1st week 2007. But emerging markets kept rallying on, continually till December, early January for India, and as late as April for China and Brazil. That's the kind of twilight zone in which people say, okay, the US has got a subprime problem. Emerging markets have got great growth still behind them. India, remember, was growing at 9% then, or 9.5%. China was 13% back then. So these countries there was something called a decoupling trade, if I remember correctly, right? I'm sure you recall that, and must have heard many experts talk about how EMs will decouple. As we now know, nothing decouples. Everything is correlated. Everything falls. Some might fall before, some might fall later. This time it's exactly the opposite. EMs started to correct in January. US market is still not corrected. So people are now saying the reverse decoupling theory, that the US will carry on. The EMs are anyway a bunch of scam-ridden economies, so who should care too much about them? It never, unfortunately, works out that way. The US will also fall. The EMs have already started falling. So when you put that together in the backdrop of very poor economic data from almost all the BRIC pack, and of course, there are smaller countries like Philippines, Thailand, etc. have had great runs, but that always happens in a pool of 15 markets. You will have the smaller markets doing well, the larger markets underperforming, as the case has been in case of EMs. Put all that together, and also the fact that Europe has not gone away. Japan, which was a somnolent market, had a vertical rally, and vertical rallies always end badly. So I have no doubt in my mind that Japan will also end very, very badly, because nothing really changed fundamentally except depreciating yen. US seems to be sort of holding its head above water. I don't see that sustaining for too long. All of that started from the middle of January. India started to crack, I think, from January 24th, if I'm not mistaken, and the EMs also around that time. And since then it has been, an absolute one-way street for the markets. The budget, if you remember in the pre-budget show, I had said that, if at all India has any chance, and I'm not a big believer in budgets changing the course of markets, but if there is any chance that we have, I think this is the only chance we have, which is that Mr. Chidambaram gives us something to sort of live off for the next 6 or 8 months' time. Unfortunately, we didn't get any of that. We got a rude shock in the form of the tax residency certificate being no longer just a necessary and sufficient condition. It was changed very, very subtly to being necessary but not a sufficient condition for FII flows, despite the headlines in the budget speech being that we want to attract global flows, we want to be perceived to be an attractive destination through stable taxation policies. That was the headline, and here in the subtext you give investors something which completely removes the Supreme Court ruling on this matter many years back, that the TRC is enough proof for your residency in Mauritius. You completely remove that. All those things coming in already a very terrible macro situation. I don't, for the life of me, understand why bureaucrats or ministers don't see it from the eyes of a foreign investor. Pranab Mukherjee made the same mistake in a different form. I think Mr. Chidambaram done exactly the same mistake again in a different form. All that put together, I don't see where the big earnings upside in the markets are. I don't see where the big macro upside in the numbers are. I mean, if you look at anecdotally, I am Ahmedabad, I am Calcutta are unable to get their placements done at all or easily. I mean, that is telling you something. These are marquee institutions and they churn out maybe 300, 400 MBAs a year, which if you're talking a $2 trillion economy, you should be able to absorb them in like a minute, which is still the case. Here, if they're having trouble placing people, that is telling you something that, there's a lot that is wrong on the ground now. It doesn't take a rocket scientist to figure out, therefore, if the markets are at highs or near highs, where that market is going to go. Is it going to take out highs conclusively, or is it going to fall short again in a third attempt, I think, after 2008 to get past the highs? Put it all together, that's the line of thought that we have had.